Harold, be more specific about what you believe needs to be investigated here. It seems as if obviously there's fundamental pressures on the price, and then the CME was pretty clear about its procedures in terms of, the prices being able to go negative ahead of this. So what do you think represents any kind of misconduct here?
Well, I find it highly unusual that for the first time ever in over 60 years that we have any commodity that's traded at a negative. And, it happens with crude oil. So on the day before the last closing day of the month. So something went awry. I know they instituted a new computer system. Perhaps that's it. I don't know. But there's more here at risk than just that. I think the very essence of being able to set the calendar month average on the back of this trading volume, I don't think people can do that in the future. So perhaps going back on that day to a weighted average of the volume traded, which is a very small volume, there just wasn't any buyers. So, why did it just go to $40? Why didn't it go to $200? But it backs up and affects the entire prior month. And so that's why it's so disastrous. That's why it needs to be looked at.
But isn't it also true that the spot market for some regional grades of crude went negative? I mean, it does happen when there is no storage and there's too much supply.
Well, there's a lot of things that people can do, and that's what producers are doing all over the country today, all over the world today, and that's shutting in production. And you don't have to cap wells like the chairman said yesterday. It's not expensive to cap wells. All you do is shut the valve and shut off the flow, and that's what people are doing, and that solves the issue. But we have about a 30% negative demand number that everybody's working with, and so that's what everybody does. They shut in production for that 30% or more. Our company is, like everybody else. So I've said earlier that you have to pare back, and that's what companies are doing all over the world.
You say like your company is like pretty much everybody else, so you are cutting back production presumably, and what do prices around these levels mean for your cash flows, for your finances? Obviously, you, as many other producers, have debt out there that needs to be serviced.
Well, we don't have any near-term debt that we're servicing, so our company's in very good shape. We have a very strong balance sheet, and we don't have any near-term issues that we're dealing with at all. So anyway, this is not the first time that we've seen situations arise like this. We did in 2008, 1998. We've seen other times in the 70s. So, that's what you deal with. And shutting in production, that's nothing new. And like if differing from what the chairman said yesterday, non-expensive process, we're not capping wells. You shut the chokes and wait a better day to sell your oil.
You've been an advisor and friend of the president. Are you advocating for a bailout of your industry? And if so, what would that look like?
We're not. The president has been very responsive. We've had a double whammy. I've said this. The Saudis teamed up with the Russians to flood the market, which is, I think, going to have a very disastrous effect on both of their countries' economies and leadership. So I think that's coming. We'll see more on that. But the president was very responsive. We had to stop that. And he stepped up, made a few calls, and intervened quickly to do that. So that went away. So, rather than bring a trade action and all those things that take a long time, the president was so responsive, and we appreciate all that he has done. Nobody's asked for a bailout. That wasn't a bailout. Obviously, we had foreign countries that was trying to take advantage of what we have going on here. So, we've had very good things happen with this energy renaissance the last few years. It is a $1 trillion turnaround instead of buying from foreign countries. We don't have to do that anymore. We've got our own.
Right, and the president has been protective of that, but it is an important source of investment and employment and good-paying jobs in this country. And I'm just wondering if there's going to be a debate, Harold, about whether there should be any relief for this industry, which has also been, fueled by cheap credit and heavily indebted companies. And there's a question about throwing good money after bad.
You're exactly right. We've employed a lot of people, still do. And we've got service companies. My heart goes out to them right now. We're going to try to keep as many of them in business as we can, but it's very tough on that sector, and that's where a lot of jobs are. So, yes, you're exactly right that our industry is beleaguered. We hope this don't last a very long time. America needs to go back to work. We've got to get the economy going, demand going. Our sector can lead, all of the economy back. And so we have to be there to do that. So we'll see as this unfolds, what's necessary for this industry to survive and be strong again.